Alright, boys. What an interesting start to the open here. We're seeing some relatively sharp moves in equities. Now the story out there is that Catalan, the government's going to enforce new elections in the Catalan region. The Spanish government, basically, they're taking, or just probably scared of the independence sort of declarations and such, and getting a little bit more aggressive in dealing with them. So it was mostly in the DAX, but it came through on the Dow. Now what you saw on the Dow was must be a lot of trailing stops there that got hit, because that's 160 pips in 1 hour, which is a lot for the Dow. That's some of the heaviest selling we've seen for a while. So the potential for bigger falls on well, some are saying that it is the anniversary of Black Monday. I assumed it was yesterday. I must have perhaps read the days wrong in some regard. But basically, this is a skittish market right now because the stocks are so high. So I did close out all my dollar yens. I'm going to close out the dollar yen trade I have in the streaming account. Not because I don't think that stocks can't rally. I'm not sure what's going to happen next, right? Just be a little bit safe. I'm going to let my short oil run because that's starting to develop nicely here. If you're looking at the 4 hours, since that resistance is held a little bit again. So just stop the entry and let's see how far it falls. There hasn't been any follow through really in the negative stories that were grinding higher for oil. But you can see that it's not so much Catalan vote and all that, because otherwise the euro would be hit pretty hard, and the buying on the dip here is pretty aggressive for the euro. The reason why the pound is so weak and holding lower is because of the weak retail sales numbers they just had. So all in all, it's quite a messy market, pretty dangerous actually, given if we see stock market selling for no other reason than profit taking, and maybe people just using it as an excuse to sell the black market anniversary. It should get interesting because we haven't seen risk off in stocks for a long time, and there's just so much room to move to the downside that the potential for sharper than normal moves could be there. Keep an eye on the VIX, see if that starts to spike higher. That could be an indication that something was going to something's happening in the stock market. It doesn't take much, right? You just need to see that the stocks are high. You can see that this pattern is repeated in dollar yen, almost pip for pip. In fact, the dollar yen's under a bit more pressure than Dow Jones, so you really got to be careful if you're long euro yen, pound yen, or dollar yen at the moment, because there's so much room for stocks to move. Therefore, there's so much room for dollar yen to move, and it's not really like there's a Fed speech or something that can change this today. So it's more, it's one of those days where you just got to keep an eye on risk off developing. I mean, you can continue to try and buy stocks on the dip if you like, but it's not my game, given that we haven't had correction for so long. Aussie dollar, there's a couple of things going on with the commodity currencies. Aussie dollar is stronger because of the really strong unemployment numbers. We'll get to them in a little bit. Basically beat on every metric. Unemployment rate dropped to 5.5%, and the employment change was 19.8. What I was interested in was the revisions from last month's stellar number, which was 54,000, and it was revised lower to 53,000. So it's still very, very strong numbers. We're dealing with 500 plus equivalent NFPs, right? Really strong numbers. Nearly 800,000 in an NFP equivalent. So last month, so it's really I mean, there's some skepticism about Australian statistics because those numbers are all over the shop, but it is still what it is, right? It's still giving that nice divergence between the Australian dollar and the other big mover today, which is the Kiwi dollar. And the Kiwi dollar is moving on the back of a new government being formed, but the Labor ended up giving the best deal to Peters. And we saw Peters' speech this afternoon, and it became clear when Labor was winning that the market started to sell there. And after this, you sort of got a little bit of follow through. I don't know how much further you'll get in the Kiwi. It's supposed to be long run pretty damaging for the Kiwi, but day to day, the biggest impact is probably going to be dollar strength or weakness from here. And there is a little bit of room for relief rally, given that the Kiwi dollar in some regards has already priced in uncertainty. So the uncertainty is being lifted. Therefore, you know, the new reality of Labour winning is negative, but how much has the Kiwi fallen just on election uncertainty alone? And where would it be if Labour just straight up won, right? You know, without the concerns about the election uncertainty, you know, perhaps we wouldn't be as low as we are already. So looking for stabilization there, and then for the Kiwi to take its cues more from US dollar strength and weakness. And at the moment there's room here for US dollar weakness given dollar yen's ability to fall. Perhaps the Kiwi wouldn't be a good one to play though long until you start to see some nice price action, if you think that recovery rally is possible from lower levels, which was something we talked about yesterday, that after the sell-off, if Labour won, that you look for stabilization and then relief rally as the shorts get out, because there's not much to continue the follow-through selling with, as the CPI numbers are quite strong and the RBNZ has jawboned relentlessly from 75. So the Kiwi has a lot of room to stabilize and rebound and go to range trading, similar to say the Australian dollar. If the Australian dollar selling subsides down near 77.50 and then it starts to rally, you know, where's the equilibrium point for the Kiwi? Back closer to 72. If it breaks 70 cents, I mean, it's not safe to buy yet. If it breaks 70 cents, you might want to look at low 69s in the immediate short term. But the further it gets, the better the idea becomes, I believe. So I don't see the way that the Kiwi's going to get crushed here. It's there's not much to follow up on. Dairy prices are decent. RBNZ's next on the agenda, right? We just see how they play it out now that they've got a bit more of a stimulatory government in place, a bit more of a spending government. You know, if anything, maybe the RBNZ will be closer long run to raising rates than Australia. But right now, the divergence between the strong Aussie data and the weakness from the Kiwi has let the Aussie Kiwi break some key levels to the top side. So smash through 110, smash through the high from in August, and so now we're looking back towards those 113 levels, which are also well known in the market up here. So that's really perhaps where you would probably be looking at the Kiwi sell-off to stall, wherever the Aussie gets closer to 113. So that would put the Kiwi, I don't know, 69.80, 69.50, given Aussie staying the same or just a small rally. I don't think you can sell the Kiwi here. You should have sold already. Yeah, it's a bit late. There's ways in which it stops falling straight away. I mean, the market is pretty short, the Kiwi, short term anyway. So the euro recovery above 118 is interesting, right? I mean, and we have to respect that. That's a little stronger than we were talking about with that new ECB paradigm. We're looking for range trading between 116 and 120. I thought that we would have a deeper pullback given the positioning in the euro dollar. So you know, perhaps the bottom end of the range has been put in here, and we have to start looking higher again. This seems a little false though. Short term, I don't really want to chase the euro higher straight at the moment. But yeah, it's definitely behaving much more bullishly than it was looking in the previous couple of days. So you do have to, as a seller, you'd be a little worried by this price action. I'm not really going to sell into this. I'm much more of a buyer at 116 than I am a seller anywhere in these levels here. So yeah, that leaves me with only one trade, which is short oil, and we'll just see how that plays out. And you know, risk-free trade at the moment, so we can hopefully get down to closer to 50, and that would it'll be good. We did have a Kiwi yen as well, and that Kiwi yen was stopped at entry after the news came out. So the Kiwi yen, yeah, so luckily, you know, you put your stopped entry for reasons sometimes. This one was mostly on the back of that. It's interesting that we're getting much more. We're getting follow through selling here on the stocks too. Intriguing. Let's have a look at some data and the Australian data. Let's look at the Australian data to begin with. It's another 20k jobs. Employment rate dropping. 4-year low. Start to see inflation in Australia. They're raising rates soon. That's the thing that we're missing, though. We're not seeing inflation. So when the labour market tightens, the theory is that wage inflation will start to creep higher. So that's why central banks are so interested in jobs numbers. There's definitely a disconnect between that and wage inflation in UK, Europe and US. So I don't know if that model really holds that well. So the wage growth is still falling hard and low. It's not really making sense to the economists. So some are suggesting, I've read this a few times, that the merger and acquisition inflows have helped the euro much more than the US lately. The relative change is pretty dramatic here for the US, where the euro started to creep higher. Perhaps because the euro is so low, right? So cheap that it was good risk reward to get involved. Also the low corporate bond market rates and such. It's half the reason why you keep interest rates low, is to get your business going. Let's see if we miss anything in the overnight read, macro wise. China's GDP today was very much in line, nearly everything hit as expected, so there's no big reaction there. Probably because you had the party congress yesterday, you didn't want to see any big shocks. They're pretty controlling in their data releases, that's for sure. There's been a lot of talk. The reason why the US was so strong, the US stock market was so strong yesterday, was it looks like there's a bit of movement in the tax bill. So some sort of melding together between Democrats and Republicans here. And you saw Munchin warning that if tax reforms don't go through, then stocks will go down. I was interested in what the ECB members had to say, but there wasn't anything that the euro tracked too high with. I mean, the euro was stronger, but I don't think it was driven too much by the ECB things. I think we'll get much more attention on the ECB next week. Yeah, but US stocks are like 8, 9, 10 days in a row. If you take out a couple of sideways days, then it's like 15, 20 days in a row higher now. you know, bigger. If you talk about serious, like it's gone sideways a couple of days, but then it's just continued high. So these are one of the days where you want to be a little careful, right? You want to be a little careful you don't get stuck on the wrong side of the market. See dollar yen's continuing to sell off here. That can drive, you know, regardless of how you think the euro and the pound should behave, and the Aussie or the Kiwi. If the dollar yen falls sharply enough, then lately there's been schooling in US dollar weakness in every other pair. So this is getting interesting. This selling in the stocks is still break even technical situation, right? Forget your technicals if this start to happen. This is going to get into the fear mode quickly. So I'm going to be watching this quite closely. This is I wasn't expecting too much for today, and so far in Europe we're getting a really interesting open. Just checking if there's anything we missed so far. This is the new Prime Minister of New Zealand, if you haven't seen her. Very young, 37. And Winston Peters. So I haven't seen too much in terms of what they gave him yet. I haven't looked into how much they sort of gave away to get him to form government. They would have had to give a lot. So it's you know, potentially if they've given him stuff which affects the Kiwi dollar, that's going to be more damaging. He's definitely one for the Kiwi dollar. He's even in the speech today that he gave, he was talking about the Kiwi dollar falling. To help the exporters. So yeah, there's a few moving parts today. Much more interesting when the stocks fall, that's for sure. I think you're going to be paying, you know, working for your pips today, you know, because US stock market selling is not normal in the last few months, so it's hard for you know, if it just fades away at the start of Europe, then sorry, at the start of the US session, then you'll probably be looking at a reversal here of dollar yen, and reversal of the pound, a reversal of the euro in particular, and more pressure on the Kiwi and the Aussie lower. The Aussie's reaction to really strong jobs numbers is actually muted right now. This is not really what you want to see as a bull. That's it should be a fair bit higher given that it beats so well, but yeah, it's very hesitant, very hesitant. So yeah, I'm not going to tag along too much today. Next week we're going to be focusing on the ECB, and we'll finish up on Thursday with the ECB meeting. And that should be the highlight of the week. We'll probably do that live, and you know, what you want to keep an eye on today is just how this Catalan story develops, but mostly I think you need to be watching Dow Jones, and just, you know, if it starts to sell off, regardless for the reason, it does have impact, pretty dramatic on most of the pairs. Alright guys, trade safe, best of luck. I'll be in the room a little bit today and tomorrow. If I see something come along with the Dow Jones, then I'll definitely be in the room. Later tonight, we can talk about, you know, how to play it. in theory, I mean, the safest thing is to be short dollar yen or to be long the euro, or short dollar Swiss if US stocks start to fall. Probably short dollar Swiss given the situation positioning there. Alright guys, best of luck.